Have you noticed that the experts may be pessimistic, worrying about the fiscal cliff, but the global stock market may be on a tear? Let's look at some of these numbers. This is great stuff. Hong Kong is up 19%. This is in the past year. German DAX up 25%. The French CAC up 11%. Thailand up 43%. India up 16%. Japan up 6%. Year to date, the USA is up over 12%. That ain't bad. So let's bring in our pal Jim Iuorio, director at TJM Institutional Services. You know, Jim, it's turning out to be a very good year, and it's turning out to be a very good year on a global basis.
No doubt about it, but let's break it down. Japan's stock market has rallied huge because of promise of liquidity injections and dovishness. The same thing can be said for Europe, and the same thing can be said for U.S. too. So around the globe, everyone's squeezing interest rates and forcing money to seek yield wherever it can. Now, that being said, I think that it could continue and have some follow-through in Japan, and that's something I'm interested in. So Europe has run kind of far. The market has chosen to believe that Europe's problems are somewhat behind us. I don't really share that philosophy, but I think that this move is interesting, but I probably wouldn't buy Europe.
The European financial risk fear indicators look great. In fact, these financial indicators look great worldwide. Now, I agree with you that the central banks are greasing the wheels. But my point is this. In a very gloomy world, a very gloomy psychology, where the worst case becomes the most talked about case, at some point, don't the markets send an impressive message? And again, they all are kind of moving together, and the direction is higher, Jim Iuorio. What does that tell you?
Yeah, it does tell me that things are better than they were. The European crisis isn't done, but it's certainly not at the same level it was probably 2 years ago. 2 years ago, they took some major steps in fixing things. I'm just saying they haven't fixed it yet, and I always like to be a little bit cautious. But like I said, I would be interested in buying Japan. I am mildly negative short-term on U.S., but I don't think there's enough. There's so underinvested that I don't think any down move would have huge legs. I think that things look better by comparison.
And gold has lost a lot of its luster. Okay. People shifting in the stocks. The Nikkei in Japan, by the way, is up 12.9% year to date. I don't know.
Look at the currency, though, Larry. Look at the currency. So always keep that in context.
The currency is way too high. The currency should depreciate.
Sure,
it's the best thing in the world for Japan and for their economic growth. That may be a little hidden gem out there. I don't know. I'm not smart enough to know. All I'll say is, with a lot of talk about fiscal cliff, including this program, because it could be a problem, the stock markets are dissonant. They're just dissonant. And they're dissing all the European breakdown stuff, and they're dissing the Chinese soft hard landing and putting it into a soft landing. Something good is going on out there, and we better keep a good eye on it, Jim Iuorio. I'm sorry we don't have more time, but
I think there's plenty of good things, though.
Stocks are pretty good. Anyway, folks.